Good afternoon, everyone, and happy Friday. It's Alyssa Corum and Ed Carson here with a look at the stock market today. We are going to break down the action for the major indexes, not just what we saw today, but for the week as well, what you can expect for the week ahead, and some interesting stocks underneath the surface as well, Ed. So give us kind of a rundown of the stocks that we're going to get into after we talk about all of those different indexes in this tale of two markets.
That's right. It's a very interesting market for sure, but we're also going to take a look at trip.com. We're going to take at Fluor, and we're going to take a look at Boeing, three stocks that are really benefiting from economic recovery hopes.
Exactly. Those reopening plays very much in the spotlight. So Ed's going to pull up Thinkorswim to look at the candlestick charts of the NASDAQ, which closed down 0.6% today, while the S&P 500 rose 0.1%. The Dow up 0.9%, and the Russell with a decent gain here as well. So Ed, the NASDAQ did have, a couple of good gains this week, but didn't end on a very great note, underscoring the point that we've been making about tech stocks just feeling like they need more time to recover here.
Yeah, that's right, Ali. I mean, we started off really poorly with a pretty negative selling day. So we bounced back. The NASDAQ did rise pretty substantially for the week. And we closed near session highs today. So we got above the 50-day line, fell back below the 50. But it's a blue bar because we closed so high in the range. But we didn't have a follow-through day to show that we're back and it's a confirmed rally. As you say, it's a split market. We'll get over to the other side of that. But the other side is that a lot of tech stocks look like this, and that's not a very appealing pattern to have that kind of thing. So even if we did bounce right back, it's probably going to take some time for the NASDAQ and for these growth stocks to bounce back.
That's right. And a super quick look at the NASDAQ on a weekly chart here. Ed mentioned the strong week that we had. So it looks like we're still holding support at that lower regression channel line, which overall is good to see, but it still, again, is showing that tech stocks are not in favor right now because the NASDAQ is just so far off of highs. When you're comparing it to the other indexes, there's other areas of the market that are in charge right now.
Yeah, the only good thing is just try to be so we won't get too negative on the NASDAQ. It did close high in its weekly range, so it wasn't terrible. And now, if we have another strong week, especially if we can have a follow through day, then all of a sudden that starts looking a lot better. But still, it's definitely the laggard of the market right now.
That's right. And just because the NASDAQ hasn't had a follow through day doesn't mean you shouldn't be looking at these other areas of the market that are performing well, because if we take a look at the S&P 500, that index is holding a nice gain for the week, and it is at highs. So hard to complain about that.
No, I mean, it's like you look at the other indexes and you go, there wasn't much of a correction or no correction at all, and we're at record highs. So, I mean, we declared after Wednesday that the uptrend resumes. We didn't really, because the Dow hit a new high, and then it was followed by the S&P and the Russell 2000, and a lot of great stocks are in there as well. So, Charles Harris, William O'Neill portfolio manager, talked about it's unusual to have the split market where normally when the growth stocks, you sort of have to go to cash because nothing is working, but there's lots of stuff working right now.
Yeah, that's right. So we'll give a quick look, speaking of the Dow and the Russell, to both of those as well. So blue chips just looking really good here. Strong gains helped by Boeing. We'll be taking a look at that one a little bit later. And then the Russell 2000 tracked by IWM, the ETF, a very strong week for small caps as well. I think up over 7% for the week. Very impressive.
Very nice.
Yeah. So that's showing the areas of the market that we are focusing on. We've been, very closely throughout the rally of last year and earlier this year, following the NASDAQ's every move very closely in detail with that technical analysis, which I think helped us, easily spot when things were getting overextended. There's been this rotation kind of bubbling up underneath the surface over the last couple of months that each week it feels has become more and more apparent. So with that said, speaking of rotation, Ed, do you want to take a look at a couple of stocks now?
Yeah.
The reopening play is still very much in play. We have trip.com, ticker TCOM, with a big gain today to cap off the week, up almost 5%, some heavy volume as well. And looking ahead, very strong growth expected on the earnings front coming up next year.
That's right. And this is a Chinese company, but it operates here as well under trip.com. They also have C-Trip in China, probably some other names. So it's it's definitely a global company. On a weekly chart, it had a 3 weeks tight actually. It doesn't quite show up for some reason, but it's like shaded, but it was definitely 3 weeks tight. So it broke out of that. So, and when, a 3 weeks tight is often seen as an add-on opportunity for existing holders, but because it sort of came just above the prior base, I think new investors could have taken advantage of it. And people should probably also be looking at these shells because there's a lot of airlines and hotels that look a lot like this. They just haven't broken out yet. Marriott, Delta. There's a lot of things in that sector that are looking quite similar.
Yes, indeed. And next on our list, we want to take a look at FLR, that is Fluor, in the building heavy construction group. Also with a very nice gain today, up almost 11%, heavy volume here as well. And for the week, we saw a 25% gain for this stock that also notched an RS line blue dot list on that weekly charted.
Yeah, pretty incredible move. And this had a miserable 2019, probably because of the shale operations shutting down, because this provides heavy construction for like a lot of the energy sector, transportation, mining. 2019 was miserable, and then there comes the pandemic, but the prospects are a lot better going forward. The energy and mining sectors are surging again. Transportation is picking up. There's likely to be a huge infrastructure bill later this year. So a lot of these construction plays are taking off. So you can see, growth prospects are improving. And, it's just it's not slow and pokey. I mean, people think, well, I don't want to go into something that's not tech because it's slow and pokey. You say 25%. I mean, that's a huge move. And this is really the first base. This was here, but a lot of it was below the 200-day line. And we tend to prefer bases that form, above the 200-day line. And so, maybe if you passed up this one, this is an opportunity to get into a stock, and that, when it's sort of proven itself a little bit more.
Exactly. That's definitely understandable and puts the odds in your favor when you are seeing that actual uptrend with that 50-day line and 200-day line stacked in the order that we like them and moving higher as well. And we have to take a look at Boeing this week. A pretty big week for the stock, up over 20%. Some nice heavy volume to go along with that. So extended here, but we were talking about Boeing earlier in the week as it was breaking out from the cup, showing on the daily, a cup with handle, I believe, showing on the weekly chart, Ed. But what's going on with Boeing this week? It's really taking off.
Well, obviously, all these travel plays are surging. Airlines, we saw trip.com. So a lot of that's going on there. Boeing got a bunch of orders, and there's expectations for maybe a big deal with Southwest, and just the whole idea of travel picking up. I think it's just really gaining steam. This, economy reopening. Disneyland's going to open up in late April. And this is another bottoming base situation. I mean, this one's actually risen quite a bit from the coronavirus lows. You can see that, but this is the first base that's really over there. There's a 40-week line, which is the weekly equivalent of the 200-day. So this is like a sound base bottoming, out of that. And wow, it was really tremendous action here.
That's right. Because you mentioned it's come well off the bottom, but that action wasn't without some pretty intense choppiness, and then also
Yes.
it was just lagging. It was underperforming the S&P. So this really feels like it is, the chart is starting to turn around along with the story as well. So it seems like a theme that is getting increasing momentum, and it's impacting many different industry groups.
Yeah, It's definitely, and this is what you have to be playing right now, and that's this way things are working. Transportation's big, mining's big, manufacturing big. A lot of things that we often don't play, but you have to keep in mind we just had the one of the worst recessions of all time, and this year we're going to have one of the biggest recoveries of all time with all the money pouring in, and just the fact the economy is opening up, and so that is just a dramatic shift. And so the growth potential for companies that follow the economy is just far greater than you expect, in any kind of normal economic recovery.
That's right. And so, what would you say as we talk about our battle plan for the week ahead? Maybe some investors who just last year got so into that growth tech mindset, maybe they're a little apprehensive at this time to shift with the market because they're afraid that the rotation is going to hit them again the other way. What would you say to them?
Like, you never know when a rotation is going to shift, but it's been, we had a number of times last year, 2-day rotations, it seemed like. And, some of those cyclical plays were rallying during the year. It wasn't like they were terrible. It's just the techs were leading the whole way. But as Charles Harris was saying on IBD Live today, there's a lot of reasons why you would say like, the recovery plays have legs. Again, the economy is really going to be surging. The growth is going to be coming in. And meanwhile, the tech stocks, besides all the other things, I mean, interest rates are still an impact on the growth stocks, and some of these stocks have had enormous runs. When you've gone up 1,000% in the last 12 months, guess what? You may have to sit out for a little while. That doesn't mean it's terrible. I mean, it's just like you run a marathon and you win the gold medal. They don't say, "Hey, would you like to go running tomorrow?" It's like, well, no, maybe you want to lay on the couch for a little bit. And, the charts are broken on a lot of these things. So,
Mhm.
there's a lot of reason to think that it'll have legs. Obviously, you have to be flexible. Just because it looks like that's what will happen, I mean, maybe the Nasdaq will go on a tear and the Dow will tumble from here. So, but you just have to stay flexible. But right now, the trend
Mhm.
is your friend with these kind of economic reopening stories.
That's right. But along with that, we don't want to be chasing stocks now. Just because Boeing had a great week doesn't mean that you should buy it here now when it's extended from a proper entry. So if we're looking for the next setups for the week ahead, building those watch lists, it sounds like investors should be relying more on the technical action than the fundamentals at this point
Yeah, you definitely need to like, look for
in
stocks
terms of screening.
in terms of screening. Yeah, take a look. Look for the stocks with a high relative strength. Then maybe look for stocks that have strong earnings estimates. You're trying to find some sense that they are going to be rebounding. But I mean, a lot of these stocks are going to have better prospects than they did last year. I mean, it's almost like it'd be hard to be worse. So they're going to have some of that. But you'd still like it, especially if they had growth in the last quarter or two. So they were already recovering. That's especially good. But and then then you have to look for sound bases and see you're there. And if you can find stocks that are in strong groups, like right now, the airlines are doing well, like these transportations are doing well, the mining, that gives you a sense that there's momentum in there. Just like there's momentum in growth stocks, there can be momentum in these other sectors. So those are all reasons to be working on that. And, that's, and if you don't, if you're not finding things, another thing you do if you feel nervous about buying them, you can buy ETFs, either broad market or sector plays. And so those are perfectly sound ways to take part in a market rally.
That's right. And that's where IBD Live definitely comes in handy because we were also talking about that earlier this week, talking about getting that market exposure on the ETF level, looking at things like UPRO and TNA instead of QQQ. So thinking about that market exposure, but also thinking about where the money has been flowing. So make sure you are tuning in to IBD Live every morning, our daily morning live stream, investors.com/IBD Live for all the details on that. And as Ed mentioned, we had some great words of wisdom from Charles Harris, our special guest today. You never know who's going to be the special guest next. So be sure to tune in. Ed, thanks so much for that spot on analysis. And thank you all for watching. We hope you have a great weekend and we'll see you back here next week.